All right, time to answer your questions now. First up, Joe from Tom in Virginia. Long-term outlook on Motorola.
Staying long, up 110% over the last 3 years. This is a company, you're talking about buybacks. They've reduced the share count 4% over the last couple of years. They've done a fantastic job diversifying into services. You think of this company, you think of mobile radios. It's more than that. It's video surveillance. It's software analytics. And it's a company that over the next couple of years is going to continue to grow from a $30 billion market cap higher and higher.
That is some suit.
Isn't it?
Right?
Isn't it?
Peak lapels.
Do we get another look at there? It is. Look at that.
I look at this guy and I say Dow 30,000.
No, I feel like we should spend more time together today so you could look at the suit.
That is some suit.
Have dinner with me tonight.
That is some suit. Liz Young, for you. Emerging markets from Matt in New Hampshire. What's the one emerging market you would invest in right now?
So first of all, I would say more bullish on EM debt than EM equity. And then in EM debt, you want countries that have a high real yield. Things that we would look at are Brazil, India, Indonesia, less exposed to the China trade war.
Okay. Peak lapels and everything.
No comment on my dress and how great my dress is.
Yeah, I like the shoulder.
Fabulous.
I wouldn't get your phone
but
too
the
close
peak
to
lapels,
his suit, though.
Got it going on today.
He does. He does.
All right, John.
Sir.
Doc,
Yep.
Rand in St. Louis, Missouri. Baba, too risky of a play here because of China trade or what?
No, not after, late September, Rand, it was 184, pulled all the way back down into the low 160s. Yesterday, we had unusual activity in this name. They were buying the 185 calls, I believe, 180, 185s. Anyway, stock's up another $3 today. I'd stick with it, Judge. I'd like
Phone's blowing up now. You see that? He was checking his phone.
No,
Their phone's blowing up.
Just talking about the right side of the desk
tailor.
being in
All right,
style.
Josh, Brandon in Georgia, TDOC.
Yeah. So I own this one. It's very volatile, but it has been trading in a range. It's a sub $5 billion market cap, so you could expect volatility there. It's a small cap name. But I'm going to tell you something. Amazon announced they're going to make virtual medicine available as part of their healthcare push for their own employees. And idiotically, the market sold off Teladoc. What they should have done was buy it on that news. It is a tremendous validation of the fact that the future of healthcare is going to involve virtual doctor appointments. This is the way that insurance companies, large corporations, providers, even the government are going to make it more cost effective to get consultations from doctors. These things are going to happen on phones, on computers. This is the only pure play that trades publicly. That's why I own it. It will be volatile. You have to accept the ups and downs. But don't be shocked if you see other companies follow Amazon, but not do it themselves, contract with Teladoc to provide this service. And I'm thinking in the back of my head, the Apples, the Googles of the world. So I like this name. I'm going to ride out whatever volatility there is to come.
All right, good stuff. Steve Weiss, for you, from Vernon in Arizona, Illumina. What do you do with Illumina?
So I got out of Illumina. I sold it lower. I'm surprised at the big bounce it had. It got over 300. I owned it because of the merger with Pacific Biosciences, which was going to give them virtually a monopoly. Unfortunately, the UK government saw that monopoly, and now they're investigating it. Asked for pages and pages of questions. I looked at the questions. So I don't know if I can justify it because of the huge valuation. They're a serial misser. But I think the downside is probably about 275. The upside is not going to be 380, at least near term. Best case, it appreciates a little bit from here.